All right, so we are live streaming multiple different topics, discussions, different pieces of this business. You see that we are here working in the markets every single week. We take a lot of responsibility and accountability in our edge in this market, and we help others do that by documenting daily how we conduct our business. A lot of the people in here already know about how I trade my model, where I trade my model, what assets I trade the model in. And we're slowly giving the tools and resources to the community so that this skill can be a transferable skill. With that being said, a lot of the tools and resources are found in the premium server. We are going to give you a little insight to the premium server today with today's student stage. And we are doing that in the form of helping you guys understand how to expedite evals. We're here day trading. We're day trading the futures markets, and we're doing it through prop firm challenges. I highly suggest that we diversify our accounts, whether that's across prop firms, whether that's across FX to futures, whether that's across prop firms to cash accounts. With that being said, that's why we want to help provide resources in passing these prop firm challenges so that you can diversify. So today, we have brought one of the like-minded professionals that has been working with us in the premium server to help us discuss how we expedite evals. This is one of the tools that you're going to find in the premium server. So for anybody that's looking for the PDF that goes along with this, that's where it's found. Other than that, today is being recorded, so you will be able to find today's live stream go up on the YouTube after this as well. Without further ado, this is Kimvesco. Kimvesco has been doing a phenomenal job in the premium server. He's going to provide some data today in regards to how we're expediting evals and what you can expect in the results to it. We're also going to walk through a couple examples of exactly what we're pointing to in regards to expediting the evals. So you're going to get the how we do it. You're going to get the results and the data that comes along with it. And then you're going to get multiple different recorded examples of it. So, Kimvesco, thank you for joining us today. If you don't
Thanks
mind,
for having me.
if you want to start with a little introduction of yourself, let everybody know a little bit of your trading experience and some of your background.
Sure. I appreciate this, Ash, and look forward to sharing this with everybody. I am Kimvesco. My name is actually Adam. I am actually a realtor slash day trader. I actually just turned 41 years old yesterday, so I've been at this quite a while. My trading
Happy
journey.
birthday.
Thank you. My trading journey started many years ago in the early 2000s when I owned another business. I have been self-employed my entire adult life, and I know, Ash, you stress this fact that having another business in addition to trading is key, that trying to rely only on trading as your main source of income is going to produce a stress that's not going to make it a very good environment for you to try to trade in. So I've always traded on the side as kind of like a hobby, whatever you want to call it, in the past. But the way I used to trade in the past was mainly zero technicals whatsoever. I mainly traded options and I mainly sold options. And mostly it was around large news events or around when companies would report their earnings. I would play credit spreads, butterflies, all kinds of different things. In 2008, when the market crashed, the day Bear Stearns came out and said that they had a hedge fund that was worthless and went bankrupt, and that started the great crash and depression of everything, was a bad day for me. I, in a matter of a few hours, lost over $50,000, and then went on to lose a lot more money over the next couple of weeks trying to recoup that money. So needless to say, after that happened, I had took a step back from the market and said, okay, well, all my nest egg is gone. I gotta regroup on that. So I took a step back, and I did not touch a chart or trade anything until October of 2022. So I took a long time off, like 14 something years off of trading while I had my other businesses. Came back, started right back into what I had known in the past, which was playing iron condors, iron butterflies, credit spreads, so on and so forth. Had some quick beginner's luck again, and then I got into 0 DTE options on the SPX and absolutely got my rear end handed to me. So that's when I stepped back and said, okay, I need to dig into the technical side of this, because what I used to do is not working anymore. And slowly, kind of like yourself, I had tried every indicator possible, coded my own codes, came up with my own stuff, and nothing I could just find as reliable. And I always heard of this smart money concept, ICT, in the back of my mind, price action, price action, price action. And I finally said, okay, well, it's time for me to dig into that. So around May or so of last year was when I actually started to dig into taking all indicators off of my charts and just learning price action. And it wasn't until probably like October through T Trades that I really dug into ICT and figured out what the unicorn was. And then it wasn't until I really joined your private server earlier this year that I was really able to grasp, how you're supposed to play the unicorn. It's not just a pattern. It's not just an entry function. There's so much to it than just that. So that's kind of a quick background on my journey as far as that is concerned. And what we're going to be talking about today is the process of expediting evals. And I know for those in the premium server, Ash, you have spoken about it before. You have a class on the way you do it. I have done it the way you have done it as well, but I kind of have come up with my own way of passing evals. And when I tell you, number one, this is only for passing evals. This method should never be used for anything other than passing an eval. It is a high risk. It's one shot, one kill. You're either passing the eval or you're failing the eval. So however much money that eval is going to cost you times the number of accounts you are trying to actually pass. If you can't take that money, get a lighter out and light it on fire and not care about it, then do not deploy this strategy. That is the whole point of this. This is for only expediting evals. So what it's called essentially is it's straddling the market right before a news event, a large news event comes out. And it's not, oh, I'll go short in one account, I'll go long in another account, I'll go short on ES, I'll go long on NASDAQ. I mean, those things are fine. People do it. This is a specific strategy that does have somewhat of an edge on playing one asset on one chart, playing either direction right before the news comes out. And obviously we'll have examples. The reason why I say it does have somewhat of an edge is because I have crunched data on some of the big FOMC, PPI, CPI, PCE news events to come up with data to see if is there an edge in this strategy that I can come up with. And I have come up with it. So I can actually show you an example. Ash, when I go to share screen, it's not letting me do anything yet. Is that something that
So I probably have to stop sharing mine. But as a quick segment, I just want to point on a couple key aspects here, and I really appreciate you bringing it to light. And I just need to repeat myself so that everybody hears us here. What we're talking about here today is only for expediting evals. This is separate from the unicorn model, and this is only used for expediting evals. We do not do this in a funded account. We do not do this in a cash account. The only purpose of this is to pass an eval as quickly as possible. So he already said it, but I'm going to say it too. For the individuals that are not capable of risking the amount of the cost of an eval, you should not do this. This is only for the individual that is capable of risking the amount of an eval. This is also only for the individual that is capable of turning the switch on and off, realizing that this is only for the eval stage, and that they turn the switch back on and go right back to the unicorn model as soon as they get into the funded stage. I need to stress that so everybody hears me here, because there's a large risk that is being taken, and that risk is you losing the cost of the eval. So depending on, if you're copy trading, depending on how many evals we're doing this with, will determine that risk. And for some people, they are not comfortable with that. That's okay. Simply don't use this idea. For the people that are comfortable with their risk and want to get right into a funded account, I highly suggest you listen up and follow along with these examples that we're about to present.
Yeah, and on that, the much as we're stressing this fact, most funded accounts are not going to allow this type of trading once you're past the eval stage anyways. So even if you attempt this as a funded account and you're successful at it, then you go to a payout, there is a highly good chance that they're not going to approve your payout. So not only is this not only for evals, most of them don't even allow this as far as their rules are concerned. So, all right, with that being said, it looks like I can share my screen now. So let me go over here and let's share this. Beautiful. Okay. So this, and I know there's gonna be questions. What's that box? What are we doing? What's all this? So on and so forth. All right. So this was an actual account that I passed last Thursday for CPI. If you look down here, you can see this is my Trade of 8 account. I have some examples that were paper trades, but I have examples of live ones as well. And this one's going to be really quick. So what I'm going to do first is show you what actually happens and then how we build this on our charts. So what you see here is this is 8:29 and 56. So there's 4 seconds to go until 8:30 before the CPI news is released. So I have a sell stop order and a buy stop order. The point is to have one of these trigger so fast that it triggers the order and takes profit, and then I close out the other side, regardless of which way. We don't care which way this is going. So you'll see how fast this happens. So this was a 250K account. So the goal is 15,000. I have 27 contracts, which is the max allocation for an Apex $250,000 account. And I'm going to press the play button and watch it because this happens in less than a second. So when we say expedite passing of an eval, that's exactly what this is. It takes literally a few seconds. So I'm going to hit the play button here. 3, 2, 1. Boom. You pass the account. Done. And you close out the other side of it. So that's how fast it can be done, right? It's a matter of the order, the trigger of the order and hitting the TP. Now, I'm going to rewind a little bit and I'm going to show you guys what exactly I did in the process of this. So I'm going to go back here. First things first, before you place any orders on the charts, what you're going to want to do is you're going to want to make sure under your orders, under the settings, you go to your instant order. If anybody knows, you can actually turn on instant order or not, which what that does is that prevents you from having to have a second confirmation when you place an order. So I turn the instant orders off first. Then what I actually do is I go to the charts, I right click, and we'll go ahead and go back here. I right click, and what pops up is this little trade, and I enter a trade as a sell stop, not as a limit, but you want a stop order, not a limit order to be put in. That's key. And we'll walk through this on the actual chart. So I go over sell stop. I then have my take profit, 27 units. I place that sell order there, and I do this 2 minutes before the news comes out. I then go up, I do a buy stop order. Same thing, 27 units, my take profit, and I sit there. Now, I know some of you have, after that, I'm sorry, I then go place the instant orders back on, because what I want to do is when I drag the brackets up and down, I want to be able to do it without having to hit confirm again, because I do it with only 10 seconds left. So what this box is right here, this box is what I call the box of safety. It's a buffer zone, because sometimes news events is going to wick quickly one direction or the other. This is telling me, this one specifically was a 25-point box. So based on past data, I've been able to average when there is a manipulation wick in the opposite direction first, what's the average points it's going to manipulate in that other direction. So this right here was a 25-point box. That way, if it decided to wick in one direction or the other, I had a 25-point buffer. Now, keep in mind, though, with this 25-point buffer, that also means when price starts to move, it has to move at least 25 points before it triggers. So once we get into the data, you'll understand that more. Because say, for example, we only have a news event that is not that volatile and on average maybe only moves 40 points in the first 5-minute candle. Well, if the box is 25 points and it only moves 40, well, then I'm only getting 15 points and I'm not passing the eval. You need to get 29 points with specifically a 250K account and 27 contracts. You need to get at least 29 points. So CPI is very volatile and has a very high number. I think on average, it goes 77 points with the buffer. So it's more like 100 points that in the first 5 minutes that CPI is going to move. And that's based on the last 12 months of CPI data. And that's where the edge comes in, is looking at some of this data. So anyway, so I'm going to fast forward this here. So after I turn the instant order placement back on, I'm just still moving the box up and down, back and forth, back and forth. And what I then do is with 10 seconds left, if you look over here, I hold down my shift button. You do have to do this from a desktop. It doesn't work from a phone. You hold your shift button down and then you click on the actual sell stop or buy stop, and then you can drag the whole bracket order up. So there's this. And once I let go, it places the order. That's why we have instant order on, because then another screen for a confirmation won't pop up and say, do you want to confirm this? And then here we go. 3, 2, 1, boom, profits taken. And then I go in and I close out the other side. This process of closing out the other side, sometimes it doesn't immediately close out, or it doesn't look like it's closing out because it takes just a little bit. Just hit it a couple of times. It will eventually close out. And then if you look here, after that's done, I then come down to my Tradevate account, go to my account summary, and there you go. So that one, even though our profit target was $15,150, because of how far and how fast it went, we had what's called slippage. And it actually gave a $19,221 profit on that specific example. Now, the next example I'm going to give you was the next day of PPI. I did the same thing, and what I thought was a passing account, I missed it by 1 point, and that's because it slipped me in the other direction. So what I do now is I give myself a little bit more of a profit buffer. Instead of going for 15,150, I'm going to go for 15,500. So that way it gives me a little bit more of a buffer in case it does slip in the opposite direction. So let me go to that example right now.
So a couple keys that I want to point out here is, notice that all of the decisions being made here are data driven, right? We're not making a suggestion. It's not our opinion, and we're only being influenced by the data. So what I mean by that is he's covered the data for how much that news event typically moves. He also has covered the data on how much of a buffer zone he would need so he doesn't get triggered into a position before the news release.
Yep.
So, in a sense, there's a lot of people that will sit here and call this gambling, which all of day trading essentially is gambling, first of all.
Yes.
Second of all, there is an edge to it because decisions are being made based on prior results. It's not a feeling, it's not an opinion. It's your edge is coming through the data.
Yep.
You're analyzing the data and understanding how to operate. When you set a game plan and execute that game plan, that's what an edge is. So this is a game plan to expedite evals, and now we can even go over other news releases.
Yep. So this is PPI, and that's a good lead in because I do have a couple examples. Ash and I've been working. He knows I've been working on this for about a week now to get some examples. I wanted to try to find some examples that didn't work or that failed. I did not get any that didn't that actually failed, but I do have some examples that didn't work. And what I mean by they didn't work is that the news event itself specifically is one of the most important parts because you need to know which ones have the most volatility to push price enough for you to actually trigger the orders past your buffer zone. And there was an event, 2 events this week that 8:30 dropped and absolutely nothing happened. And I have those as well that I'll show as examples so you can see what I'm talking about. But this is PPI from Friday. So I passed on CPI on Thursday. Here's PPI on Friday. Once again, this is my Trade of 8 account. This was the one where I had a 1-point slippage and I came up like what, $400 or $500 short. I went on later on that day to just take a trade and get the $500 that I needed. But it got me close enough at least. But here's the example again. So I know some of you are saying this is all going really fast. So once again, we right click on our charts, go to stop order. We have a sell. Right click the other side, trade, buy stop, buy. Then I go up to my settings and then I turn on instant order placement. So that way I don't have that second confirmation that I have to do. And this part I'll speed up. There's really no part. All I'm doing is just moving my box of safety there back and forth. So we'll go ahead and speed this up to the end. Let's see, here we go. All right, so with 10 seconds left, that's when I go in and I start to move everything. So I hold my shift button down, I drag up the sell, shift button, drag down the buy, I let go, and there you go. Boom, done. So this one, even though it went well past my take profit, because it went so fast, this was the one that slipped me by 1 point. So I like I said, I came up short by 1 point on this one. Whereas the other one, it slipped so far and had such a strong candle that it slipped me in the other direction, which was $19,000. So there's those 2 examples. Now let me get an example of one where price didn't do anything. This was the Empire State Manufacturing from earlier this week. This I am doing on a paper account. And you'll see here where 8:30 comes and literally nothing happens. So once again, right click, trade, sell stop. There, I'm bumping up the allocation or the take profit. Same on the other side. Not a limit, but a stop order. Instant orders on. And then we wait 10 seconds, move it. Three, two, one, and nothing happens. So this was one of the news events where it doesn't have a lot of volatility. So that's why it's important that we choose the news events that have the most amount of volatility so we can get price to push in one direction or the other. So at this point in time, I said, okay, well, let's just close out these orders and move on, because it did not do anything. And now I haven't. Yep, go ahead.
So with that being said, what would be the news events? And if you want to give a little insight to some of the spreads that you'd be using for each one of them.
Sure. I have all those. Let me just give this one more. So here's another example of, this was the core retail sales. And the only reason why I want to give this one an example is I know we're all, well, most of us are NASDAQ and ES traders, which are US futures traders. But certain events from other currencies are important. So for example, this example here is just standard US core retail sales, which probably wouldn't really do much. However, it also happened to be the Canadian dollar CPI. So I'm not saying every event you want to go look and say, oh, US, whatever. This one just happened to be that it was the core retail for US, but also was a Canadian CPI. And now this again, this is a paper trade. And I do stress that anybody who wants to test this strategy out, do it in a paper account first, but expect paper to have a delay in executing orders, when it's taking profit, and when you try to close out the other side of the order. Paper trading that way is very slow. And in a live environment with an eval account, it's much faster with everything. But we'll just, once again, this is just an example. Yeah, here we go. Up to the 10 seconds, I dragged it. Once again, dragged it down. And 3, 2, 1, blast off. And there it went. So you can see here how it took a while. Like, it's showing negative and that it didn't actually go. It already executed everything and it was done, because you'll see it just closes itself out. So I'm thinking, oh, well, great. That didn't work, but it's just because it's a paper account. And paper trading, see, it just closed it out and it gave me it. So for some reason, paper trading is always a little wonky like that. So that one there was a 22,950 that it gets. So once again, it slipped in the positive direction on this example. Now to the statistics and the news events that we all want to hear and check out. Hold on one second.
While we're waiting for the statistics, one of the things I want to point out is we already know how many contracts we're going to use, and we already know how many points we need to pass the account.
Yep.
So the goal, and again, it's called expediting for a reason, because we're trying to pass it as fast as possible. The goal is to do this in one trade. So we're trying to go as large of size, and then you just need to know how much it takes to pass the account, because obviously you're going to have different position sizes for a 50K, just like you're going to have different profit goals for a 50K. You have to understand how many contracts you're allowed and what the profit target is, and then once you understand that, take the maximum amount of contracts, figure out how many points it will need to pass that eval, and that's how you set up the orders.
Yep, exactly. And Arrow, thank you for pointing that out. I didn't say that. When I place the orders a minute or two before the news event, I do it on purpose, what I call way out of the money. That way they don't accidentally execute. So that's why you see me placing the stop orders, the buy and sell orders, way above or way below. And you don't have to do it 2 minutes before. If you get really good at it, and I mean, you could do it 30 seconds before, however shortly before you want to. I was just doing it 2 minutes as the example to show everybody. So what you're seeing on your screen now is the last 12 NFPs. And here's the dates. I also have screenshots for all this stuff. Here's the date of the NFP. This is direction. This means how far price actually went from the time there was either an open high low close or open high low close. So this is, first of all, the direction it went in total in the first 5-minute candle. This is the direction if it manipulated in the opposite direction first. Now, on average, you can see that NFP will go in the opposite direction of the actual closing of the candle, on average 35.33 points.
So that this would explain the buffer zone.
The
So
buffer. Now, I'll go one more over the buffer zone, but you see the buffer zone is not 35, and let me explain why. So, even with a buffer zone, for example, this manipulation, it went 80 points. I'm only trying to capture 29 points. So, even with a buffer that's less than the average on this specific example, you still passed. Now, in this specific example, you actually passed on the manipulation phase and not on the actual closing of the candle because it only moved 41 points and the manipulation did. So I have this to kind of play around with and go, okay, well, what if it's 40 points? Because what I'm looking at first is, all right, if any of these that are under 30, right here, this one's under 30, then that means this is going to trigger, which is 160 points. That's 130 points that I got. Obviously, that one passed. This one is going to trigger with 30 points, but it's going to also move 34 points, which means I still pass on the manipulation phase. So the pad is not so much to get rid of the large manipulation legs. You want a pad big enough to get rid of these small ones, 14, 6, 19, 20, 20. But then also not too big to be able to still catch this one or that one. This one it didn't catch. So if that makes sense, essentially. So that's why I play around with these numbers to go, okay, what's the average? And then can I still, even with my buffer, can I still get it even on the manipulation leg? So for example, on the last 12 NFPs, if you played a 30-point buffer, you would have passed 10 out of 12 times. Now, granted, this one I did count as passing. It wasn't a full $15,000, but it's close enough. I'm going to give it a pass. And I have screenshots on each one of these examples to back the data up with all this stuff. So that's NFP. And now the key again is this. How many points does this move? Because it's a multiple of factors. It's how many times does it manipulate? What's the average distance that it's going to manipulate before it moves? And then after it manipulates, how far is price going to run? Because we need all those factors to align. So NFP as a whole, from the open to the highest or lowest point of the first 5 minute candle, moves 98.96 points. And on average, it manipulates 35.33 points. CPI, out of all my testing, it's the best. And the reason why it's the best is it has a 92% pass rate. So I did, once again, on average, it's 42 points to manipulation, but I did a buffer smaller, once again, because I'm more worried about filtering out the small ones and still having it, big enough to get rid of these smaller ones, but also have it not too big to where I can still pass even on the manipulation leg. But if you look at just how far that first 5 minute candle goes from open to either the highest or lowest point, CPI beats NFP. And most people would probably think it's NFP. NFP only moves 98.96 points in the last 12 NFPs. CPI moves 127.5 points. And with this method, with a 40-point buffer, you would have passed 11 out of 12 times. Granted, once again, one of them was around 13,000. Again, I'm still counting those as a pass. Now, PPI. PPI is not as good. PPI only moves on average from open to either the highest or lowest point in the first 5 minute candles 65.48% of the time. However, it has a much lower average manipulation and there's less manipulation. Any time you don't see a number here, that's because price didn't manipulate. It just went straight in one direction. There was no manipulation. But even with that, you're passing 8 out of 12 times. Now, FOMC. FOMC, this is only the data drop at 2 o'clock. This is not the press conference. Again, FOMC, I thought, would be much higher, but it only moves 65 points on average from the open of the candle to the highest or lowest point of that first 5 minutes. On average, the manipulation is 17 points. And I only did the last 8 because it's like I did the last year, basically. It's not every single month. But you still would have passed 6 out of 8 times. Now, the last one I did was PCE. PCE is by far the worst one. In fact, you had less of a, actually, sorry, I messed that up. It's 11. You had a lower passing rate, in fact, a higher fail rate on PCE specifically. So once again, as you can see, each one of these news events, the amount that the candles move in that first 5 minutes is getting less and less. So PCE only moves 43 points. Again, manipulation on average 17. So if you did a full 20. Now this we can mess around and see if there's really much of a difference. Like, let's see if, no, that one, no, yeah. So again, the whole point of the box is not so much to cover us from the large manipulations. It's to block us from getting an order entered in with one of these smaller manipulations in the other direction first. And why is that important? And because if we have our two boxes and our two orders there, one side gets entered and then doesn't go to take profit, and all of a sudden it drops and goes the other direction. As soon as it tags in that other order, it's going to cancel the two of them out and you're going to be done. So that's why we have this box. We only want one order to trigger, because if the other one happens, they're going to cancel each other out and you're done and your account's blown. So that's why we can't stress enough the fact that this is one shot, one kill. Whatever you're putting out for the money for that eval, just expect that money to be gone and be okay with that. And if you are, then it's going to be a lot easier for you to employ this method of passing these evals. So what I wanted to do is bring up my charts, and I wanted to, if anybody has their charts in front of them, let's just log into paper trading. And what I want to do is kind of just show the process and have you guys kind of just follow along so you can understand what I do. So let's just say we're using a 25-point buffer. What I use is the position tool. You can use whatever tool you want. I drop the position tool on there, and I go drag it down 25 points, either direction. There's your 25 points or so. And again, while price is moving up and down, I'm just, wiggling it back and forth. I right click on my mouse, go to trade. I go to a sell stop order. Sorry. This is why you have to have instant order off, because it will place it right away. Sell stop. I want 27 contracts, and I want my take profit 15,500. Do that. And then I'll do it up here. Right click, buy stop, same thing. All right, there's the orders. Then let's say it's 10 seconds before the news event, or we turn instant orders back on. 10 seconds before the news event, we hold our shift button down. We drag and let go. Shift button, drag and let go. And we let it blast off. Now, what I'll do is I'll trigger one order just so you can see. Let's just say this triggers real quick. All right, that's triggered. First thing we do is close that out. We close out the other side instantly. That's the first thing you want to do. And then let it take profit, whatever happens. So that's that. That is the end of my part of the presentation. Any questions or anything you want to add?
Yeah, so the point that I wanted to bring up is, again, the risk. I know I keep repeating myself, but I really have to harp on it. This is only for evals. This is not done in funded accounts. This is only for people that can accept the risk. That's the first thing. Second thing is, you're not going to be able to do this on multiple different platforms. My Funded Futures and Apex, they have one-day pass, and they also have news trading. So it's very simple. Go and do your due diligence beforehand, because firms like TopStep are not going to allow this. So do not try to do this on a TopStep eval. It's very simple. Do your due diligence beforehand before attempting any of this. I can't speak for the FX firms or any crypto firms. I focus on ES and NQ. I've been focusing on my Apex and my Funded Futures accounts. So FTMO, I have no clue. funding pips, I have no clue. I can't answer those questions. That is where you, as an independent thinker, go and do your own due diligence. And you do that before you attempt to do this.
Is
If
there
you guys,
any, oh, yeah, if any questions?
yep. So if you guys have any questions or comments, please throw it in chat now. That is the information and the lecture that we wanted to get through today. We'll take a quick segment of questions. If no questions, we're going to wrap it up after that. Thank you for your time today, Convesco. I greatly
Absolutely.
appreciate all of the
Yep.
information. We did record this, so this will go up on the YouTube afterwards. Let's see if we get any questions. If not, that was a phenomenal presentation.
Thank you. I think Mr. X, I think Ash just answered that specific question.
Yeah, so Mr. X, you're going to have to go to FTMO and read through their news trading policies and read through their eval policies. I don't know the information on FTMO, so you just go there and see if they have a one-day pass. If they do, see if they allow news trading. If they do, then you can take advantage of this. If they don't, do not do this.
Yep. So I'll start. Got a couple good questions. So Sauro, 5 minute. I put it on the 5 minutes, first 5 minutes. You can do a 1 minute. Really doesn't matter. I did the 5 minutes just to collect the data. You literally could do this on any time frame. It doesn't really matter as far as that is concerned. CPI, NFP, yes, Don, that is correct. Those seem to be the highest volatile and move the most. So those seem to be the two best. And I'll bring the data up again. The king stay the king. It's just the position tool. So I have it on my favorites bar, but you also can go over here and it's either the long or short position. So it's just the positions tool is all it is. That's what I use. You could use a GAN box, whatever you want to use. That's the tool that I use the best. And then luck trader, why stop order? Let me show you right now. If you place a limit order above or below price, it's going to execute it. Like for example, let's say I wanted to do a buy order up here. If I go in here and I go create new order, I do a limit up here. What's going to happen is it's going to execute it right away because we're above price. And same thing with a sell order. If I try to sell below price, it's automatically going to execute the order. So a stop order allows you to place an order above or below price in the opposite direction without it instantly executing. So that's why you have to enter it as a stop order, not a limit order, if that makes sense.
Does MFU and Apex allow this? Yes. I just stated that those are the two firms that we've already completed this on. So they have seen us complete these orders and they still allowed us into the funded accounts.
Yep. I now have 9 funded accounts, and 3 of them I used Ash's method of fading the news, and the other 6 I have used this method, and I plan on getting another one to complete 10 using this specific method. Now, the other thing to keep in mind, I did use one time I did 3 accounts at once on this with a trade copier. If you're using trade copiers, as we all know, trade copiers can get a little wonky. So I just want to say, if you're going to use a trade copier and you're like, hey, I'm going to go 10 accounts at once. All right, well, just keep in mind 10 accounts times however much you paid for each one of those accounts. So if it's a 250 right now, they're on sale for $40, expect $400 to be gone. Hopefully it passes and you don't, but just expect it to be gone. But if you're using a trade copier, not all the accounts might execute. Some might execute, some might not execute. Some might execute with the exact number of points, some might not execute with the exact number of points. So you got to understand when this news thing is happening and it's going so fast and it's triggering and taking profits, sometimes the computers aren't fast enough to keep up with it. So just keep that in mind, that If you do plan on using this with a trade copier, again, do it with caution because it might not work across all of the accounts.
And so I also want to point out that anything in this business can fail. Just because it has worked in the past doesn't mean that it will be a 100% win rate. There will be times where this fails. There will be times where this works. There is no guarantee in this business.
Yep.
So that is why you have to accept the risk beforehand. Don't go into it as a experimental thing. Go into it when you're ready and you've practiced it and you've saved enough money for it.
Yep.
Do your due diligence beforehand so that if it doesn't work, it doesn't bother you.
Correct. And if there's other news events that you guys want to try this out on, go back into the data. Go bring up Forex Factory, pick a news event, get on your chart, go back to that news event and mark up the charts. See how far price went in those directions. Mark it up from the open high, and I'll show you what I mean by that. So, for example, let's just say this was a news event here. It's not, but let's just say this was a news event. So, in fact, let me see if we can find a better one. Let's see here. Go to an 8:30. Here, perfect, right here. Here was Tuesday. This was the one that I use as an example to pass on. So what I mean by, if I go back to my spreadsheet here, and I have this direction, right? This direction. This is from the open of the candle to the highest or lowest point. And then this is from the open of the candle to the highest or lowest point in the opposite direction. So if I go back to the charts, this candle was an open, low, high, close. So I would measure out from the open to the low. This one manipulated 53.75 points. So if I had a 30-point buffer, it would be too much of a buffer to pass on this specific one. You would have gotten something. But maybe a 25-point buffer, because again, on the 250K account, you're trying to get 29 points from wherever your order triggers. So you have to take the point total that it went minus the buffer to see if that got you your 29 points. Then if I measure from the other side, so the open high, 18.5 points. So this candle only went from open to the highest point, 18.5 points, and it manipulated 53.75 points. So if you guys want to try news events, this is what I would do. This is literally the data that I compiled. I went over and over and over and over and over all these events and then came up with the spreadsheet so that way I can have somewhat of a calculated answer to my questions of how far does price move, how often or how much does it manipulate? Well, even if it does it manipulate enough to where I could still pass? And I'll go over the numbers again. Once again, here's NFP. NFP from the open to the highest or lowest point of the 5-minute candle on average over the last 12 months has moved 98.96 points, and it manipulated in the other direction 35 points. CPI, it moved on average 127.5 points, manipulated 42 points. PPI, it moved 65 points and manipulated 23 points. FOMC moved 64 points and manipulated 17 points. And then PCE only went 43 points and manipulated 17. So I would say that hands down, CPI and NFP, again, just because of their passing rate alone, would be some of those news events that would be the best to do this. Now, I don't have it as an example, but the very first time I ever implemented this strategy, it was on a JOLTS. It was a 10 a.m. JOLTS. And I said, all right, I've practiced, I've done it, I just got to try one. And sure enough, it passed. So it doesn't mean these are the only ones you want to do. These are the ones that I have pulled the data on that I wanted to present today. And definitely NFP and CPI are the ones that have the most volatility, which makes sense because of the type of news drivers that they are.
And an important note to bring up, Arrow just brought it up. These are NQ numbers.
Yes. Sorry,
So for
Aaron. Yes,
everybody
this is
wondering,
all on NQ. Yes.
right? So all of these numbers here reference NQ. So ES is a completely different animal. We're
Yes, it
only
is.
talking about NQ here.
Yep.
And this can be done in any kind of account, whether it's a 50K, 100K, 250K. All you need to do is calculate the amount of points that you would need to pass the challenge.
Yep. And so for those in the premium Discord, I'm gonna have this access to this file. But for anybody that's not in the premium that wants to, hey, join the premium, there's a lot to it, or go back and collect the data yourself. I'm a big believer of, Ash said it the other day, you give a man a fish, they're going to come back. You teach a man how to fish and you give them a life. Figure out, do what I just did. Go look at some news events. Say, okay, which ones do I want to try this on? Which ones has the highest rate of volatility? Go onto your charts. Look at the numbers. Test it over and over again. Do it yourself. Get repetition under your belt, and it's going to become second nature. Like it's so easy now for me because I've done it many times. I've collected the data, and now I look forward. I mean, it is. I do have to say, it's fun doing it. When you get past an account in 1 second, it's pretty cool. Right. So, but I fully understand the risk. I accept the amount of money that I'm putting up for those accounts. And like I said, I'm okay with taking $40 out of my wallet and lighting it on fire and not having it again, right? And it's only because I'm okay with that. Am I willing to do this? If for anyone that's thinking about doing this and you're not quite there in your journey, you might not have a cash account you want, and you go, oh, $40, that's going to pay for half my groceries, this week. Well, maybe wait until $40 is not a big deal, or get a smaller account. Try it with a smaller account. But we can't stress that enough, that this is only for evals, and only do this on money that you are okay with just blowing out the window.
Phenomenal, Mr. Kinvesco. I greatly appreciate your time today.
Absolutely. It's been fun. Thank you for having me.
So for all of the individuals that are wondering how all these premium guys are getting these payouts, passing these challenges, seeing such progress in their business, it's because we have tools and resources like this that we practice and develop a skill with in the premium server. We are going over this type of information daily, whether it's in live stream, in the personal threads, in DMs. These are the types of tools and resources that you're going to get with the premium server, on top of being around like-minded professionals like us both here today. So with that being said, I'm very thankful for everybody that showed up today. Thank you, Kinvesco, for all of your time and information.
Absolutely.
For anybody that's looking for the recording of this, we will get this put up on the YouTube.
Fantastic. I appreciate the opportunity. Thank you, Ash.
Thank you very much. I hope everybody has a great day.
Y'all take care.